You have found Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. We're locally underwritten by the Bank of Sun Prairie. My name is James Cademan, entrepreneur, speaker, and helpful coach to small business owners across the country. And today we're welcoming / preparing to learn from Drew White, the founder of IBC Drew, who is working with Create Tailwind. So Drew, how are you doing today?
James, thanks for having me, man. I'm doing good. Busy day, a lot of life changes, but I'm having a great day.
Sweet. Did you say a lot of life changes?
A lot of life changes, yeah.
Just today.
Well, I mean, just things upcoming with the family, you know.
All right,
so
all right.
Trying to get prepared.
Nice. All good stuff, I imagine, or hope.
All good stuff. Yeah, we're gonna head off in an RV adventure,
all right,
full time. So we're
just whole family.
Whole family, 6 to 12 months. We got about 2 weeks as of this recording left till we go. So we're just trying to get it done.
All right. So you have kids, I imagine?
Yeah. Yep. We got a 5 and an 8-year-old. Yeah. And a dog,
wife, dog, 5-year-old, 8-year-old, and I imagine, whatever equipment you need to make sure you can do your job on the road.
Yep. Yeah.
And an RV.
We got to get a satellite for the Wi-Fi, but that's, because we heard campgrounds don't have good Wi-Fi.
Right.
So, yeah.
Yeah. They get that one pipe coming in, they share it with 500 people.
Yeah, exactly. So
everybody's trying to watch Netflix on a rainy day.
Yeah. Stream Netflix on those apparently.
Gotcha. Interesting. All right. Yeah. So where are you headed to first?
Probably actually Missouri, just to visit some friends. And then we said, we got to make this fun for the kids. And someone told us Santa Claus, Indiana has a place called Holiday World. And it's like adventure amusement park. So we're like, we'll stay there 2 weeks, make sure the kids realize like this is gonna be fun,
Oh wow. All right.
Go see friends for a few days and then we're gonna head straight there. Actually, the real answer is the first place we're gonna camp is like right outside our city of Omaha to make sure we can handle it. So we're gonna
the first night be like, nope. Go home.
We're like, we're moving back home. Okay. So we couldn't handle 5 days. Yeah.
That is funny the first day. You don't have to deal with the first day of the kids saying, "Are we there yet?" Because
yes, exactly. We're like, it's just a short trip. We set up a practice, and honestly, I need a lot of practice back in the camper in. So that's where I'm pretty weak.
I have to admit, I've never stayed in a camper, or at least not many times. Never my own. But one of the most exciting things, or most entertaining things, when I was a kid, because we would always stay in a tent, was we would sit in the tent with the door open, and we would just watch the campers back up.
Oh, yep.
Because as a kid, you didn't have a whole lot to do, and some of these places seemed like golf courses. They didn't have any play equipment. It was just a big grassy field. Yeah. And so you could see all the campers trying to back up. So you'd get there Friday afternoon, and you just eat your hot dog or brat, whatever, watching campers back up, hit trees, yell at wives and husbands, and want to disown their family as they're back.
Yeah, my friend said I'll be, the talk of the campground. Everybody's gonna be watching me.
Oh, funny.
Which I was like, that's not helping me. I'm just putting more pressure on me. He's like, yeah, everybody's gonna be watching you back in, buddy, because they're gonna laugh and be like, hey, he's a newbie. So
funny. It's interesting though, because this was when I was a kid, that was a long time ago. This is pre-backup camera. Mm-hmm. Now I think with backup cameras, it's probably easy.
Yeah. I need to get one. I don't have one on ours, so I probably.
Dude, that's the best. Yeah. $15 you'll spend.
We got one on the truck, but nothing on the camper. So we need one on the camper.
So it's a trailer.
Yeah. Yep. It's a fifth wheel. Yeah.
I don't think it would hurt.
Yeah, it's probably smart.
I don't think it hurt. But at any rate, tell us about the Create Tailwind and what you have going on.
Yeah. So we teach something called the infinite banking concept.
All right.
And it's really, using I would say a unique vehicle, specifically designed whole life insurance through a mutual insurance company. And really the premise of it is using it like a bank for your family or for your business. And so we work a lot with business owners, a lot with real estate investors, show them how to use it, really pretty much like you would a bank, almost replacing a, checking savings account.
All right.
Lots of benefits to that. And so that's really kind of what we focus on teaching people. It's really our main thing. And the guy that really founded our company used to be a financial advisor and didn't really enjoy that world. It wasn't for him, and found his way to this and really liked teaching people this and the freedom that, and there's a lot of freedom with it and a lot of, variability, just different ways and that you can use the system.
Okay.
And so really we focus on helping people create financial freedom as well using this. So
All right.
yeah.
So I got a ton of questions that I want to ask you.
Oh yeah, yeah.
But let's get started with just the entry level. How did you get
Yeah.
into this?
Yeah. So I mean, I might have to back up a ways, but I was a pediatric oncology nurse for 10 years.
Wow.
And yep. So I kind of start my story there because I graduated with 150,000 plus of student loan debt.
Oh,
And
yay.
I was like, well, I'm like, and I didn't really know anything about money, right? Obviously, because I was probably a terrible financial decision, but and so I was making about 40,000 a year around there, probably a little less to be honest. And I remember my dad, he had no financial background, was a pastor, so but he was worried about me, so he sits me down and he teaches me some Dave Ramsey, budgeting concepts. I'm not as big of a Dave guy anymore, but it kind of kick-started me, and so he sits me down and I realized like half my income is going to these student loans that I took. Like, what am I doing?
Yeah.
And so I do credit Dave with really like lighting my, financial fire, if you will. And so that's something I'm on a path about 10 years of just really finding out that I was entrepreneurial, finding out that I was willing to try stuff, and I kind of figured out I'm very family oriented. And so I realized I don't really want to do this nursing thing forever because you got to work weekends and holidays, and the pay's not that great. I did like the job, and so I tried different things. I tried flipping mobile homes. I tried some day trading and just some other things like that. And I always knew so I got out of debt quickly, and a bunch of nurses would always ask me for help with finances. And I was like, I didn't really want to be a financial advisor. So I was like, well, I'll just help them on the side here and there. And then randomly through a podcast, heard these guys talking about this concept called becoming your own banker, or in the infinite banking concept. And so I was like, that's interesting. Read up on it, met with them, kind of thought, I don't know. I've always been taught whole life insurance is a bad thing. I'm not really open to this. And then I read on it. I ended up, I'm halfway through it, and I closed this book, and I turned to my wife and I was like, this is what I want to do with our money, but I also want to teach people. I don't know why. I just know it. And then I haven't really looked back since then. And I even just about a year and a half ago let my nursing license expire. So
Wow. All right.
yeah.
So let's go back because you touched on some very interesting things.
Yeah.
Did you say flipping mobile homes?
I knew that's where you're headed. So
buying and selling. That's
people
awesome.
are always like, huh, mobile. Yeah. So yes, flipped mobile homes. So what I would do is I would, find them cheap. And then you basically turn around and provide financing for them and sell them as like a handyman special. And there's a lot of mobile home people who are handy. Banks don't really want to loan to a mobile home that needs fixed up, right? And so I would take a down payment, and then basically I'd hold the note on it. I still have a few notes out there right now. So
all right.
So I knew I wanted to get into real estate. That's what everybody said the wealthy were doing. And once I got out of debt, I was like, okay, now what? I don't know anything about building wealth. I have this, Dave Ramsey chicken and rice and ramen mindset
Right.
that he teaches. So I was like, it's kind of scarcity. And so I started reading about real estate. Well, I was still scared of debt, didn't know good debt versus bad debt. So I thought I'll just do mobile homes. I've heard someone talking about it, and it's low cost of entry. I could buy a home for $500, and
Really?
yeah. I bought almost
God.
all my homes I bought for under 1,000. But there was two that I paid extra for, and ended up being for a good reason. They were really nice homes.
Okay.
I could flip quickly, but yeah. So then I just, was like, I'll just try this out, low cost of entry. And it was a good business model. I couldn't scale it well. So I kind of slowly backed away from it. And now we're looking at different real estate at the time, my wife and I. Yeah.
The mobile home thing just is intriguing to me because it's so like the barrier to entry. It's so cheap. I mean, relatively speaking. I mean, to some people, depending upon where you're at financially, $500 may be a big deal.
Yeah.
But from a investment standpoint, $500 really isn't that big of a deal, especially if you're buying a place to live.
Yeah. Right.
So were these places in Omaha?
Yeah, they're in mobile home parks, mobile home communities.
Okay.
And to be honest, later I realized, I should have been talking to these managers and the owners about if their parks were for sale. Now parks are like a hot commodity,
Oh, interesting.
I didn't know that at the time, but so you can buy them in mobile home communities. There are people who will find some on private land, and those are really good deals because you get the land too. but mobile home communities, you do have to get approved to, do this. And some managers don't like you there. But if you go up and you kind of explain, well, actually my goal is to get you a great tenant. Like that's
Mhm.
all so I'm going to help you. And it's really a win-win. And if you can explain that well to them, it's fine. Early on, I was kind of stumbling and having a hard time. But there's, I will say that's a low cost of entry. I think I started with about 5,000 was I was like, okay, this is my budget, 5,000. I'm going to just try this. I definitely learned some lessons, especially on my first one, that I wouldn't repeat. And you can lose some money if you over repair a mobile home. So you don't want to over repair. That's a huge mistake.
Over repair. Don't make it too
Yeah.
nice. Okay.
No, exactly. You want it livable. You want it
All right.
livable. And as long as you're upfront and honest and say, this needs work. This is a handyman special. It's not like I'm telling you this is one thing and it's another. In fact, I would actually go out of my way and tell people like this outlet doesn't work. This one doesn't work.
All
Here's
right.
this leaks here, and just let them know like you're getting you got some work here,
Yeah.
So and then no one ever called me, thank goodness, and said that I sold them a bad home. So, cause I tried to be pretty upfront.
So what's interesting about this is that you are essentially financing these. So you were being the bank for them.
Yep.
And you're like, banks have lawyers and insurance and stuff like this, and you're a dude.
Yeah.
So tell me how that worked.
Yeah. So when I none of this I would have done without a mentor. I hired a guy who I had followed his podcast and watched his YouTube videos and everything. And his name is John Fedro, phenomenal person. Would take my phone call at any time. He would look at pictures of the homes I'd send. And so he also provided me with the resources, like the documents that I would need. And then I had a local attorney look them over, that I knew. And so, but yeah, so then I just, thanks to him, was able to set it up. And I had, even a trust set up and all these things I wouldn't have known without John. So it's basically, and that's why I would tell the tenant when they buy it is, you think of me like a bank. I'd say, so if your water heater goes out, you don't call the bank, call the handyman, repair it. And so just to set that, so they would understand they're not renting the home from me. They really do own it. They're just paying me back for it.
All right.
I've thankfully never had any calls for repairs. I had a guy that struggled with payments during COVID and gave him I just gave him a few months off and put it on the back end for him. And, try to be, even though I'm the bank, I try not to, be a jerk.
Right. So, yeah, I suppose there's delicate balance, right? That banks don't necessarily have the opportunity, but depending upon where you're at financially, maybe you have less opportunity, right? I need the money because I need to eat, kind of thing.
Yeah.
So interesting. I'm just trying to wrap my head around. You got a $500 trailer house, whatever.
Yeah.
You're selling it for a few grand, or what are you selling it for?
I could take you through some like real ones. Yeah. So like my first one was, I did not do the note thing. So, cause that's the one I made a big mistake on. I bought it they were going to give it to me for free. Cause they needed to have basically nothing on the balance sheet for this couple that was going to move into, like a living community, or one of those like elderly living communities. So they couldn't really have any assets, anything like that. So they needed to sell it. So they were like, well, it needs a lot of work. We'll just give it to you. Well, then they decided, well, actually we want $500. And I was kind of desperate to get in the game. So I was like, all right, let's do it. And I don't know if my nose wasn't working, but I didn't realize like the home was full of dog urine. Like the first time I went through there, horrible. And I walked all these handymen through there and they're telling me, oh, 7,000 to 10,000 to repair. And I told you my budget's like 5,000. I'm like, oh no, all this, so much. It was not a handyman special, so much more work. The only thing it had going for it is it was a double wide. So, for anybody that doesn't know mobile homes, there's single wide, which is just kind of narrow, and double wide, which is double the space. And, I got lucky. I found a guy. Also, I told them they could keep some things there and I would get rid of it, which I later learned is a huge mistake. They took advantage, left me a ton of junk that I then had to pay for to get them all out. And when I did that, someone broke windows when they were hauling things. I mean, horrible. So I had a painter. Also, this is funny at that one. I had a painter I hired. My wife and I are going out of town and I bring him the paint. And I said, I'll pay for the paint. I'll pay you. Bring him the paint. Come back. He stole my paint. He didn't paint the home. And
no, really?
I would have paid him so much more to paint the home than steal the paint. I was like, oh my gosh. Who steals paint, right? You have to be in a pretty low situation in life. But anyway, I obviously didn't vet him well. So that home, I still, so I, and I had to pay lot rent and things like that. So I ended up probably being like around 15 to 1600 in it. And I sold it for 6,500. So I did come out okay.
All right.
And then from there, I had some where a lot of times what was going on is on the note, basically when someone was giving me a down payment. So I would always require a down payment, and it would depend on the quality of the home. Like if I knew it needed a lot of work, I'm not going to make someone pay a high down payment. But usually my goal was the down payment would put me back to break even. And
Gotcha.
then the month, then I'm good on the monthly payments after that.
All right.
So that was kind of typical. So, and then if you're paying for, 5, 6, 7 years, obviously your return on investment is pretty actually high, even though it's a cheap mobile home. But so
are they, so what are our payments $4 a month, or what is 7 years on a $5,000 note or something like that?
No. It's like, so there, it'd be about like, and so the other way is when you advertise, like if I told you, my math might be wrong here, but you had to pay me 22,000 over 5 years, you might balk at that. But if I say you got to pay me 300 a month for the next 5 years.
Oh, gotcha. Okay. And they're like,
so,
well, rent is 1,200 across the street.
Yeah. So the
right.
notes are anywhere from 300 to 500, depending on the home and
gotcha.
If it's a double wide, single wide, and also it depends on the community. Like if it was a really nice community, you can get more. If it's not a nice, you can get less. So,
all right.
Yeah. So there's a lot of nuances that you wouldn't imagine with a mobile home. And then, you get to meet some fun people.
Yeah, I bet. It's interesting. I've interviewed a lot of real estate people just to make money off real estate of some kind, right? Whether that's apartments, flipping houses, flipping land, whatever. So the mobile home thing is always something in the back of my head. I'm like, how does that work?
Yeah,
And
I know.
Can you make money at it? But it sounds like you can. So
to be honest, that's how I found my way to it. Because when I heard this John Vedro guy, I was just like, nobody's making money at mobile homes. So then I was like, I got to hear him out. I got to hear what he's saying. How do you make money flipping a mobile home? And then I was like, awesome. Then I started doing it.
Yeah, that is cool. That is cool. Okay. So you kind of say, hey, the home thing is cool. It's just not my jam though. What was the next one?
Yeah. So before that, I did day trading. Then I did the mobile homes, and the day trading kind of led into mobile homes because I realized I can't just day trade and not have some other income, because it was really tough mentally to do that. Right. So I was like, okay, real estate. That's what everybody says, so it's kind of trying out things. And then the mobile home thing that led me around to the becoming your own banker. I found that around that time. All right. And that's really like, or infinite banking, what we talked about. Yeah. And I found like, oh my gosh, I'm really passionate about this. Mobile homes I'm not so passionate about. Also, my wife and I, we were like, we could probably do, an apartment complex, and something like that, and kind of upgrade a little bit. We haven't found one yet. We're still looking, to be honest, but that's something we've been working on. All right. So then I found my way to the infinite banking thing. And then I was like, after a few months, like I knew this is what I want to do. I had never had that feeling in a career before. And so then I was
even after being 150,000 debt from college. Yeah. You'd think that you'd like that one, or you'd hope that
you'd hope you would, but no, that's kind of, I'm not a huge, if you want to get me on a tangent, I'm not a huge fan of our current system, the way this works, where you're 18 and you make a lifelong terrible decision like that.
I'd agree.
I don't really know how you're supposed to know when you're 18 what you're going to like when you're 30. So I kind of think it's, not really set up well for a lot of people. And, I obviously fell into that trap, and I'm hoping to help others not do that, because I set myself behind by at least 5 years by doing that. So
yeah, I can still remember being on a bus when I was in college a long time ago. And there was a guy that I knew that he was an older guy, but he was going to college. And by older, I mean, I was 19, 20, something like that. So he was probably like 30 or something, because back in it's just like a 7-year-old. It's like, oh my gosh, look at that kid. He's 12.
Oh yeah. Yeah.
So I don't know. In my mind, he's 60, but I'm sure he wasn't that old.
And
yeah.
AARP.
Whatever he was, he's like, dude, you got to invest. And I was working 3 jobs, going to school full time, doing everything I could to pay for rent, college, and if I was lucky, ramen or something. Right? The joke was I was going to school to pay for gas insurance so that I could drive to work, to pay for all that kind of stuff.
Pay for that. Yep.
Anyways, I was like, I'll get to it.
Yeah.
And I'm like, man, if I would have listened to that clown on the bus,
oh my
gosh, it would have been a different world.
Mm-hmm.
So anyways, interesting. How did the day trading go with you? Were you good at it?
What?
Were you good at it? Like,
That's the thing. I was good whenever I had something else. So
oh,
like,
okay.
so I would say, I was good and bad. And I thought, so I was like I said earlier, I was trying to find a way out of nursing. So I'm like, I really did enjoy it. I was always interested. I realized I actually had kind of always had this interest in money and things like that. And so, and the stock market, and I even had a friend tell me like, yeah, he was in finance and he was like, you were always asking me questions. I was always curious why you decided to be a nurse. I'm like, why'd you do that?
Stop school.
It would have been helpful. But anyway, so yeah, so I would do well when I was a nurse, and what I would do is I started working part-time and doing this, and it was fine. But then I got confident and thought, okay, I'm so good, I can quit my nursing thing and do this.
All
And
right.
whenever I would do that, that would be too mentally taxing. It was like, now you're not thinking about the right things, which is probably a good life lesson. You're not thinking about doing the right processes.
Oh, gotcha.
So with that, you just got to follow your trading rules. And so I would instead of thinking about my trading rules, I'd be thinking about money, and I'd be so obsessed with it. Which actually really led to uncover some money mindset issues that I later figured out.
Oh.
And so I would, like I'd be up really far and then I'd be down really far and come back to break even. And so that's when I was like, okay, I realized I got to have something else. And, I actually made my way back to it. I did something I say that I want to do again someday, but I do love what I do so much right now that it's like, that probably be like my number 2 passion. So until I've done this longer, like maybe someday I'll do it again, but
all right.
It sounds crazy, but it taught me more about myself than anything I've ever done, because it's so mentally taxing and you got to like be on your A game mentally when you're there. So,
all right.
yeah.
It's interesting that you mentioned the mindset around money.
Yeah.
Because I feel like there's a lot of people that, even myself included, I guess myself up until maybe, I don't know, 5, 8 years ago, something like that. That phrase, like your money mindset, whatever, I would have been like, what are you talking about?
Yeah.
But I remember going through some sales training and they were talking about that, like how that can interfere with you making a sale.
Yeah.
Because you're like, oh, hold on to this money. It's so precious.
And they can feel it. Yeah.
Yeah. And it was interesting when I'm listening to this guy talk, and I'm like, what are you talking about? And then he talks more about, the way that you were essentially taught or raised about money, where it wasn't just sit in this desk, let me tell you about money. It was just, how did your parents treat money? What was their feeling about money? How did your friends, parents, all this kind of stuff?
Yep.
Thinking, oh my gosh.
Yeah.
I've been brainwashed. What happened? So tell me about what you discovered a little bit about yourself that was a benefit to going through all this.
Yeah, it's funny. I just actually had lunch with my sister right before this, because to say, kind of a goodbye lunch, and
oh yeah,
we talked a little bit about that, about our childhood growing up, and so yeah, I just discovered that I had real, I would say, scarcity around it. I didn't see money and life as being abundant, and that you can go create more. I'd always be worried about holding on to the few dollars that I did have, and how to not let those escape my grasp, and kind of penny, like, I mean, we haven't gotten into this, but I also extreme couponed at one point when I was getting out of debt the Dave Ramsey ways. So I was,
awesome.
And so I was, very scarcity, and it took me back, so I started writing. Actually, one exercise that, listeners might find helpful is like, I had a mentor tell me to write down the phrase money is, and then just write 5-10 minutes without thinking, just really writing, first things that come to mind. And it was really interesting because, I do have more of a religious background. And so one of the first things that came up was like, money is the root of all evil.
Oh, sure.
Like, well, and actually the real verse is the love of money is the root of all, right? But you always, in my circles, that was left out. It was always money is the root of all evil. And so I had, really internalized that if you have money, you're evil. So sometimes I would feel like I was sabotaging myself. And it's like, well, yeah, if you think you're going to be evil when you make money, you might be self-sabotaging,
right.
Subconscious level, and so, and just things like that, and I grew up in a great home, but, money wasn't probably our priority, I'd say, and we were middle income, but my dad was a pastor. And so, so we just there were times, I can remember certain stories of just, certain shoes I was wearing versus other kids. And those are things that really, really helped me see like, oh man, I got some growth in this area. And another thing that was huge is I just realized I wasn't taught about it. Probably what you were saying, like no one really teaches you it in high school or junior high. You weren't taught about it. And then all of a sudden you're supposed to figure out how to create more of it, and you're like,
yeah, Good
You
luck.
know? Yeah, and you're like, but no one's taught me anything. Nothing in our education system. No one that I grew up around taught me anything about money. So
Hmm.
there's a lot there. I could probably go on for an hour about that.
Yeah, interesting. Even baby
Uh,
squirrels get taught how to get nuts, right? And
yeah, that's right. Yeah, exactly. Oh, that's
interesting.
a good one. I like that one.
So let's talk about the being your own bank thing, because that's always been, I've heard about it. I guess it's
Yeah.
I'm curious about it. So just let's dive into that.
Yeah. So, like I mentioned, I was pretty skeptical, I would say, and not really open to it because it does involve whole life insurance. It's not traditional whole life
Okay.
insurance. So where like a traditional guy would sit you down and, be like, James, how much death benefit do you want? Right. Uh,
Right.
so we're kind of opposite, or I'd say we're not kind of, we are. We're looking at how much cash value do you want to get into the system. And then the reason is that there's benefits that you get from that, which then will spit out a death benefit. And so the benefits are, you get tax-free guaranteed growth. Depends on your insurance company, but it's around 3 to 4% right now. And then it can never be that growth can never be interrupted. So when you put that money to work, because of the way the contract is designed, if it's set up right, the money actually grows inside your policy, and then it grows outside of it when you put it to use for business or real estate, because there's a death benefit attached to it. And so then you get the dividends. It's like I said, tax-free. Anytime you use the money, it's not counting as income. And then there's also ways where you can really structure it to be even more tax advantaged. And so, it took me a little bit to wrap my mind around it. It's sometimes complex, but once I started to get it, I was like, oh man, I wish more people understood. It's kind of like everything in my life where I was like, I wish people taught us about money. I wish people,
Hmm.
told you to wait to go to college and think a little bit more. And it's like one of those things where I'm like, I wish more people knew about this, but
All
there's a
right.
whole sector that are turned off to whole life that, they don't get to see that opportunity, I would say.
Yeah, it's interesting because my perception of life insurance just as a whole comes from somewhat of a foundation or experience that I had when I first started my business.
Mm.
First started my business in 2006. And I remember going to networking groups, and you go to this networking group, and this life insurance salesperson is like, I want to meet you for coffee and learn more about your business. And I'm like, great, this guy wants to learn about my business. And
Yeah.
we go for coffee, and he's like, tell me about your insurance. And when do you think you're going to die? How much is your house worth? Don't you want to take care of your wife, and just throw out all this stuff? And I'm like, whoa, whoa, whoa. I
Yeah.
thought you wanted to learn about my business, right?
Yeah.
And so
Yeah.
I just felt like this is a pool of sharks, and I
Yeah.
don't
Yeah.
feel like swimming with them.
Yeah.
So it's just one of those like, nope. Anytime somebody said whole life, they might as well just be
Mm.
making fun of my mom or something. Like, I don't want to talk to you anymore.
Yeah.
So I'm curious because I'm like, they can't all be lame.
Yeah.
So, and
So
um
if I'm lame or not, I mean, I'm not, but
no,
no.
right, fair, fair. The other thing is I had somebody, man, this was quite a while ago. They were going through the math, and this is again, there was some kind of salesy person. So my wall was up, I
Yeah.
guess, as far as that goes. But I was looking at their math, and I'm like, shouldn't I just invest the money instead of putting it into a whole life policy?
Mm-hmm.
Because I could get a better return.
Mm-hmm.
And part of my answer I answered myself because I'm like, well, did you invest it? Like, no. I mean, there's a
Yeah.
discipline factor of saying you have to put your money in this thing.
Yeah.
So can you touch on some of that?
Yeah. Yeah. So, well, one thing I'll tell you is kind of funny you said about the taking you out. So I had a friend who, this Northwestern Mutual guy asked him to golf, and I was like, I told him, I don't think you should do that. And he's like, why? It'll be free golf. And I was like, because he's trying to sell you something. That's all. That's what that situation is. Sure enough, my friend still had to pay for his golf, which he didn't expect. And then the guy hounded him for weeks, told him he could do, and then he told him, I have a buddy who does this infinite banking thing. Oh, I know all about infinite banking. I know about it. And so then once he got kind of to the nuts and bolts, it's like, turns out he didn't know about it. He just knew about whole life insurance, which again is very
Funny.
different, traditional whole life. But you are right. I mean, and that's part of my job is I come up against that a lot. And to be honest, it's kind of funny because if I met myself 5 years ago, I wouldn't listen to anything I had to say because because
That's awesome.
it's like, well, I thought whole life people were scammers too. But and then it's funny, the thing you were talking about with if you had invested it. So that's the other thing, the Dave Ramsey phrase out there, right, is the buy term, invest the rest. And I always find it interesting because a lot of times people get that first part, which makes him money by term. And he's connected with a group that buys term.
Oh,
But they often,
really?
but they
Oh,
often that created that, one of those phrases. So, but they often don't invest the rest. They don't ever actually do that. But the real answer I tell people is traditionally, money wise, we're talking about either or scenarios. So either put your money in this investment, or you put it in your savings account, or you either put it in this investment or you put it in whole life. And so we kind of have to like shatter this thinking, I guess, in our world, or we try to shatter it, because we're actually saying still do what you're talking about, still do both. So we're saying just put your money in the whole life policy first, because you're going to get all those tax-free guaranteed benefits. It's creditor protected, all of those things. But then take that money and go use it to invest and grow your wealth outside of there, because you're now getting growth outside of the policy.
all
But then
right.
you're still getting that uninterrupted compounding that you can't get anywhere else and except for in whole life, at least not right now. Where if you use your money, so like if you took it out of a bank account, right, and they're giving you 0.06% interest.
Yeah, right. If you're lucky.
Yeah, if you're lucky, if you're one of the rich ones, and you've lost out on that compounding whenever you use that money, which was nothing. And in whole life, it's the exact opposite. You use that money and you still get that compounding, but you also still get to grow your wealth. So that's where, like, at our company, we're really big on like showing business owners and real estate investors, how to use this out, to create financial freedom. Really is our goal with it. So there's some people that they'll tell you like, go use this to finance a car, and you can self-finance. And truthfully, like I will do that. Like I've done that. I just did that with the RV that we purchased.
Oh, nice.
And that's because the bank was offering me 9% over 12 years, which was like $22,000 for them. So,
Wow.
I was like, I'm going to do this myself. But our big thing is really use it for your business and for, real estate. And then it eventually becomes like a retirement account long-term too.
All right. So I don't know how to ask it other than how does it work?
Yeah. So, typically if someone was going to sit down with me, and you mean like kind of how it gets set up and all that?
Yeah, I guess how, just numbers wise, I guess what, it's not free, right? So people have to pay something in, and they have to pay something in routinely. And then I imagine you can't just start like, hey, Tuesday I put the money in, Wednesday I'm going to borrow it back.
Okay. Yeah. No, those are good questions.
Be some time frame that has to be in place.
Yeah. So because there is an insurance side of it. So if someone gets set up, they have to get, an exam, and all of that. And then, but once they do pay that first payment, if they're set up to pay annually, which most people are, once that first check clears, so we tell people about 2 weeks, it's actually really highly liquid. So they can get that money within 1 to 3 business days, really. And typically it's more like one. I've never had to go more than 1.5 days. And the insurance company doesn't ask questions. So they're not like, James, what are you going to use this money for? Like a bank, right? Where you got to give them like your medical records, your 4th grade report card and everything. And so, so they are very liquid, and they don't care. They just, so you tell them where to send the money and they send it, and then you use it for whatever. And then the other question about, how much to put into it, that is really just case by case. So we don't, like, I never sit down with someone and say, this won't be beneficial for you unless you put 100,000 in. We have people that do as little as 5 to 10,000, all the way up to literally a million and more a year into it. And it just depends on each person's goals and their situation. So, we get a lot of people who do 150, 100,000, 50,000. That's fairly common. But, I just had someone in the military just last week who he just wanted to start. He had some credit card debt. And so he said, I want to do 6,000 a year, and I want to, I want to use this for my credit. I'm going to pay off my credit card and pay myself those payments back.
All right.
So it's really variable.
How would that scenario work? I guess versus him just paying directly to the credit card.
Right. So he could do that. Right. But the banking part is where he wanted to basically make that interest off of himself. So he's already comfortable with the, I think it was like whatever it was, 250 a month payment. And then they're getting a certain amount of interest. So he did set up the contract, but then he paid himself. He paid that off, took a loan, paid that off. And then he treated himself like the credit card company now and started making that 250 a month payment back to himself. So he's now making the interest that he was off of the credit card company, which may be a little complex to start here with your listeners, but
Yeah, I'm like, oh my gosh, my brain is exploding.
Yeah, that's a lot. That's a lot to throw at you, especially without drawing it out. But that was just a strategy he wanted to use, so we worked on it. My point being that you can start with as little and as much as you want, really.
All right.
Yeah.
So I guess the next question, I'm 45.
Yeah.
So me looking for life insurance now is like, dude, you got a foot in the grave. We don't want to insure you.
No.
We're just like, we'll give you life insurance. It's only $10,000 a month.
Yeah.
For like a.
Well, you're talking about term, right?
Yeah. Right. Yes.
Yeah. So for term, that's probably the case. In terms of whole life insurance, though, you're actually at a great age, and when you're in your 40s, that's a good age. If you're a woman, guys out there, I'm sorry to tell you, women get better rates than us. They're expected longer, sure. But 40s is a great range. You're going to get good rates on whole life. Even we have clients early 50s that still get pretty good rates if they're healthy. That'll depend on. And even if they're not, there's lots of ways to do this, because like our focus isn't so much on insurance. That's a nice benefit. Our focus is on that cash value and using it like a bank. So if you have business partners, then you have an insurable interest in them. If you have a key employee, you can insure them and control that policy. If you have a spouse or kids or grandkids. So there's lots of ways that we help people still set up this system, even if we get a guy who's, 70 and not going to get good rates, not healthy. Well, he might have some grandkids. And then that's nice too, because he can actually pass those policies down tax-free to them.
Really? Okay.
So and then and say you have a grandkid or a kid that's entrepreneurial. They don't want to go to college, then they can, instead of using that money for college, they can use it to start a business or buy their first. So yeah, lots of flexibility.
So can we talk numbers just using round, maybe even semi-unrealistic numbers? Like, let's just say for ease, I want to stick $100 a month in, or $1,000 a month, or whatever is realistic-ish, but easy number to think about the math with.
Sure.
And my little arcane brain.
Yeah. And you mean, so like what it would look like sticking a number into the contract and then using it?
Yes. Yeah.
Okay. And yeah, so I'll give you, a real life example of someone that I work with.
Perfect.
Okay. I'll try to keep the name out to protect the innocent.
Yeah, sure. Protect the innocent. Yeah.
So I have a client, he puts in, I'll just do a round number. He puts in 100,000 a year. So he does that. And then he's a land investor. So he prefers not to work with banks. So and now that's not everybody. Like, we have some clients what they'll do is use the money in their system for a down payment and still use banks. So it's, and like, even though interest rates are high right now, they're still historically cheap. So that's still a good route. So what he does though, is he takes the money out from his policy. He takes a loan. That's what they call it. They call it a policy loan. And so he takes that out, lends it to his business, to his land business. And he basically creates now a hard money loan between himself and his land business. So he charges it. So, and he can have a couple deals a month. I think he had like 3 the other day, and it was like going to cost him 30,000. And so, and we'll just stick with round numbers. It was around that, but so, he takes a loan for 30,000 out of that. He charges himself an interest rate that's fair. He has to, meet certain rules, and every state has different rules. So I think he's charging himself about like 18% right now. And then he has his business, using other people's money, pay that loan back. And then as that loan gets paid back, he can go redeploy that money again. And as deals come up, so he just basically is his own bank. He just borrows against his policy constantly. And, the question that comes up is like, well, why would you do that? It seems sillier than just using a bank, right? And that's what I would go back to, that compounding interest that you get in that policy while you're using that money. And then, the other benefit is he gets to deduct that interest that he pays back to himself.
All right. So let's talk about this. Let's just break this down a little bit.
Yeah.
He throws $100,000 into the policy. He can then borrow that $100,000 from the policy.
So that's a good question. So there like the insurance side of it, like when we talk about the traditional whole life insurance, that's where, people don't like traditional whole life insurance, and we have to set it up a specific way designed to get you higher cash value. So you can't get like 100 in year one, but the traditional guy, you'd get 2% of what you put in year one.
Okay. Yeah. Right.
Yeah, we can get you to like 60 to 65% in year one. And it's the cost of, it's like, and the reason why we work with business owners is they understand there's a cost to starting a business.
Mm-hmm.
So there's a cost to starting this banking business. And that's the cost you'll have a cash drag in year one. But then what happens is that uninterrupted compounding takes place. So you start putting in $1 into your system after a couple of years, and you turn around and you can loan yourself $1.25 per dollar you're putting in, right? And it gets really good over time. And so like, if you can think long term and look at like year 10, when I put in 100,000 and I immediately lock in that I can loan myself 125,000, and that keeps happening and gets better every year, I'm more than willing to take that cash drag hit in that first year. But it is something people who think short term have a hard time with it.
So I guess that when I would talk to typical whole life guys years ago,
Yeah.
I haven't talked to one in a long time. They would say you're paying your policy, and then eventually your policy has enough of an investment where the policy itself is paying for the premium, maybe.
Sure. Yeah.
I don't know if I'm using that phrasing
No,
correctly.
that's good. Yeah.
So you're saying essentially this guy throws $100,000 in on day one or week 2 or whatever. Fairly recently, he can pull out $65,000 to essentially borrow from himself or from his policy.
Yep. Because he's the owner of that policy. And if you look at the writing, the insurance company doesn't own it. You own it.
All right.
So yes, he can. There was something in there you said I was going to touch on.
The premium, because I imagine something's got to pay for the policy.
Yeah, that's what I was saying. So like, that's where I would say we're different in terms of, we're really big on like, we can show people and draw them out individually, how you can really create financial freedom really within like 5 years if you're taking this and going and buy cash flowing assets and then putting other people. So then when you do that, you're using other people's money to pay that back. And so that within like 5 years, basically you're not even paying those premiums. And so like, I have a client, it's really funny. She's doing amazing. So she's bought this she's putting 100,000 also, and she bought an Airbnb. She's making 25% like cash on cash right now. Or actually, no, I'm sorry, she's at 50% because she put in 25. Wow. She put in 25,000 to the deal, and she's making 12,500 a year. So she's at 50%, and she's worrying about her premiums long term. And I was like, in year one, you're already like, you're getting there, like you're at 12,500. And so we show people how, if you keep, and she didn't put the full amount in yet. She's only used 25,000 of that. And so we show people how our goal is actually to teach people you can use, real estate, business, whatever, to have other people pay that back. So you're not even going to be paying your premiums long term. And in fact, hopefully our goal is to get people to where they have more of these, more than one, if we coach them well enough. So that's really our focus, is like using it to create freedom, and then even expanding your system and do it even further. So,
all right. So you're not even really concentrating on the death benefit. The death benefit is just so that it's an insurance policy, essentially.
Yeah. I call it icing on the cake, or an ancillary benefit. And the thing about it is, a lot of the term people is like, oh, well, you're underinsured. You need more insurance than this. But what happens is, if you do this right, like I'm talking about doing, where you're really, compounding over time, you'll end up with more insurance than you ever need, because you're going to expand your system. If you're using it to create financial freedom and you keep doing those steps, well, then you're going to have to take out more policies. And so the guy that created this concept, Nelson Nash, or he doesn't say he created it. He says he discovered it. He's since passed. I think around the time of his passing, he was at about like 30 of these or something like that. And
30 policies?
Yeah, he was, because he had businesses, and he was passing these down, and even the guy that is the head of our firm, Jim Oliver, I think he's around. I think last time I heard him say he was high 20s. So
wow.
Yeah.
All right. Holy cow. That's almost like you need employees to keep track of your insurance policy.
I think at that point you do. Yes. So, and it's, and it's one of those things, like people actually, banks use it. It's called BOLI, BOLI. Companies use it, corporations, COLI, COLI. And so it's known, in the wealthy circles, I would say, but it's lesser known to everybody still.
All right. Interesting. So not everyone's going to necessarily have $100,000 to lay around.
Nope. Yeah.
So when you're talking to, let's say, someone that's interested in investing in trailer parks or something like that.
Yeah. Yeah.
Where, like what's too small for you to even talk to?
I think, I tell people I can never tell someone like straight up, this is too small to start,
Sure.
and one thing that will depend on it, like if someone who's 60 and said, I want to put 6,000 a year into this, well, we got to make sure that they could even pay 6,000 a year for enough insurance coverage. So that's, I have to be careful there. But typically, like the smallest one I've set up for someone was about 5,000.
All right.
So, 5,000 is a good, starting point. There are some that can go cheaper. And so I wouldn't want to rule anybody out. Like if there's someone, that's 30 and they want to start 3,600 a year. I mean, that's definitely possible. And we don't like, even though we have people that do large numbers, we don't turn anybody away and say, no, you're too small. We're willing to help anybody start where they start. Their financial freedom path might take a little longer, obviously, starting with smaller numbers, but so that, it really is going to depend on their age, health, and all of that. But typically around 5,000 to 10,000 is a good range, starting
All
range.
right. I remember talking to a friend of mine that got a whole policy. I think she was like 22, 23.
Yeah.
And so I didn't know her until she was early 30s, something like that.
Yeah.
So it was interesting because she's like, by that time it was good and it was essentially self-funded, whatever. But
Yeah.
like how many 20 somethings got sold on that actually stuck with it?
Not many, I don't think, but yeah. And the other thing I would say, I just would throw out there for people is, and I won't go into all the specifics of why, but if someone's looking to sell them universal life or variable universal as a banking system, it doesn't really work for that. I'm not personally a fan of those. I personally feel those are actually more to make that person commission than anything. And so we honestly, and I don't know if I get in trouble for saying this on a podcast, but we say that we wouldn't even sell it to our worst enemy. And I have people who I meet with who they think they can do this banking thing. And then I look at it and they're like, and then they tell me, well, I can't even take a loan on it for 5 years. And I say, well, that's not banking. You should be able to take it right away. It should be something set up really for banking right away. So that's just something I would caution people on.
Can you help me define the difference? I guess term life insurance. I think it's safe to say everybody knows that. Yeah. But the universal versus whole, I couldn't tell you the difference.
Yeah, it's and that's the thing. I don't specialize in it. I just I've seen it. So I would say the main thing is that it's failed a few times and been repackaged.
Okay.
And it's kind of tied more to the stock market. So
gotcha.
It becomes more expensive over time. Where whole life, you're going to have the same number over time. And so it's set up that way, and it's not tied to anything. It's just this guaranteed rate that you get that's contractually there, that's actually mandated by the government to get it. So it's not my specialty, but it's I've read up enough that they've failed a few times, and a lot of times what ends up happening is people can't even afford to keep paying that over time as they get older. So it looks like a good deal. And then Jim, like I said, Jim Oliver, who's the head of our firm, he absolutely will not let anybody touch it in our firm and go near it. And has stayed away from it for a long time because he's seen it, because he's had so many clients that he's seen it fail for, that he just really does not care for.
All right. So what happens if an insurance company folds? Do people just lose their...
Yeah, so there is one that folded in but the past, I don't know how many years. Typically what actually happens is another insurance company just buys them because it's such a profitable business. And the ones that do fail, usually there's some warning signs and they do some shady stuff.
Okay.
So and the good thing is you can check their financial ratings. So so that's why we're very careful about the insurance companies we work with on this. And we do make sure they're very financially solvent. And, a few of them, I heard something about like if they paid out, I won't give out the numbers because I'll mess them up, but basically if they pay out a large, like almost everybody's death benefit, they'd still have a ton of money left over. I can't remember the exact percentage what it was.
Okay.
So they're very financially solvent if they're a smart, good insurance company. But what happened on that one that failed is another insurance company did just buy them and transferred all those policies into their company and still on. So that's at least what I read up. That's not a company I work with, so I don't know as much about their history, but that's what I read. All
right. Well, very cool. Well, Drew, we're running out of time here. So I guess how can people find you?
Yeah. So my website, ibcdrew.com, which is infinitebankingconceptdrew.com.
Gotcha.
They can chat with me on there. They can sign up for my newsletter. And I'm also big on LinkedIn, which same thing, LinkedIn, IBC Drew. So.
All right. IBCDrew.com, you said?
Yep.
All right. Infinite banking concept. Awesome. And how long have you been doing this?
Yeah, just about 2 years now. Yep. So.
All right.
Yeah.
And I guess you got your RV or help finance your RV from that. So that's pretty awesome.
Yep. And
you use the product, I guess.
I do. So I used it first before I ever taught anybody. And then that's huge in our industry. We're like, if someone's teaching it, they should also be doing it. It's something you should believe in enough to actually do yourself. So yeah, I love it. And it's definitely changed my life, and we wouldn't be doing the RV thing. And we were never a sole income family. We were dual, and now we're sole. And so it's been life-changing for me.
Wow. No pressure, right?
Yeah. I can handle it this time, unlike day trading.
So tell me just really quick, how will you sell while you're on the road?
Yeah. So I do most of my business through LinkedIn. And so I post, interact with people. I'll probably network more. I can work in any state. And so, I work through Zooms and phone calls, and
all right.
So I'll just keep doing what I'm doing, just more mobile, and make sure I have a good satellite internet.
Yeah, that is awesome. That is cool. Drew, thank you so much for being on the show.
Yeah. Thank you, James. I appreciate it.
This has been Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. We're locally underwritten by the Bank of Sun Prairie. If you're watching or listening to this on the web, you could do us a huge favor, hit that big old subscribe button, give it the big old thumbs up, and of course, comment and ask some questions for Drew, because this is the whole infinite banking concept. I know we got people that are big fans. We got people that may not be fans for whatever reason. And you got people like me that are just like, what are you talking about? So I really appreciate you being on the show, Drew, to help us figure this out. But I'm certain people have some questions. So if they could do a huge favor and slap those on the bottom there. My name is James Kidman, and Authentic Business Adventures is brought to you by Calls on Call, offering call answering and receptionist services for service businesses across the country on the web at callsoncall.com. And of course, the Bold Business Book, a book for the entrepreneur and all of us, available wherever fine books are sold. We'd like to thank you, our wonderful listeners, as well as our guest, Drew White, the founder of IBC Drew. That's Infinite Banking Concept.
You got it.
Awesome. IBC Drew, working with Create Tailwind. So Drew, could you tell us that website one more time?
Yeah. IBCDrew.com, which stands for Infinite Banking Concept Drew.com.
Awesome. Doesn't get easier than that, right? Past episodes can be found morning, noon, and night. Podcast link found at drawincustomers.com. Thank you for listening. We'll see you next week. I want you to stay awesome. And if you do nothing else, enjoy your business.